Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number. Good evening. As we did with Dubai, we decided to move the event in Abu Dhabi also by one day to Saturday, so that instead of 30th September, we'll have the event on 1st October. So I will see you in Abu Dhabi on the 1st of October. Those living in Abu Dhabi need not take the pain of traveling to Dubai. We will see you in Abu Dhabi on the 1st of October. Those who want to see me in Abu Dhabi may drop us an email at the address given below or contact us by the WhatsApp number that flashes below. My team will get in touch with you. Thank you. Good evening and welcome back to Be Rich. Recently, I read an article in the Wall Street Journal which I thought I will discuss with you. This article was discussing the strength of the US dollar and how the US dollar index, which has gone way past 100 and is now at 107 and 8, even the Americans are surprised at the strength of the US dollar. What is happening and why is the US dollar so strong? First, we have to understand billions and trillions of dollars printed by the US Fed have been invested across the world. That is, from 2008, where interest rates have been kept artificially low, money has flown out of America to all parts of the world. And there has been a lot of investment made in US dollars. Ever since the pandemic struck, the US Fed created more money, and even this money flew out to the rest of the world. People pledged their paper wealth to borrow money and invested it in startups. But the moment the Fed realized that it was too late to act on inflation and started to attack the inflation problem by increasing interest rates in spite of severe pressure from Wall Street claiming that there would be a recession if they kept raising rates. Jerome Powell deterred for some time, but as inflation kept climbing, he came back and said very strongly, even if there is pain, he is going to increase interest rates. After doing some modest raises in the last two cycles, he has increased rates by 0.75 each. It is clear that he is going to raise interest rates by 0.75 by the end of this month. This would be historic because this has not happened in the last 40 years. The US short-term bond yield, which was at 1.65, has now shot up to 3.3. By short term, I meant the 10-year yield. The 10-year yield is now at 3.3 and is expected to go to 3.5. Others expect that US inflation will drop very quickly. I am not so sanguine. I expect this battle to be a long one. Therefore, I expect interest rates will keep on rising till at least first quarter of next year. That will be June 2023. Because unless inflation falls substantially below 4%, it would make no sense for Jerome Powell to stop and pause. Because if he pauses, then inflation will go up. Why am I giving you such a lecture on inflation? As US interest rates keep increasing, then two things happen. The return gap between American bond, which is considered as risk-free, and the other bonds and other methods of investment decrease. Therefore, money starts to flow back from the rest of the world into America. This creates a positive feedback cycle. As more money flows into US Treasury, then automatically the strength of dollar increases because dollar demand is increasing. As dollar demand increases, the Fed is not going to increase the supply of dollars. In fact, the Fed is doing the opposite. It is doing monetary tightening. It's not tightening at any rate at which it promised. It is tightening at a much slower rate. But the fact remains, it's tightening. Therefore, the amount of dollars available is also going down. So two conditions are at play. The amount of dollars in the market is shrinking and demand of dollar is increasing. So imagine a commodity which is in short supply and which short supply is going to increase, and at the same time demand for that product is also increasing. The value of that product will increase. Also, it was said for many years that the dollar would die and the RMB would take off. Unfortunately, like in case of Japan, it has proved to be a non-starter. In spite of being factory to the world and building a formidable economy, the Chinese have not built a financial market which is fully free, fair and developed. Because if you have a fully fair, free and well developed financial market, the central government would have to lose control over the politics of the country. That is something that the Chinese Communist Party is not ready to let go. It is very clear from the way Xi Jinping clamped down on the tech companies such as Didi, Alibaba, Tencent, and others that it wanted to retain control and run a controlled political and economic system. This meant the demand for RMB would drop. At the same time, the Chinese property boom, which was engineered by the government, has collapsed, and it has proved to be a Ponzi scheme backed by the government. People are refusing to pay mortgages. All this has put the Chinese economy under severe pressure, and the Chinese economy has also stalled. So RMB as a competitor to US dollar is a pipe dream. In fact, the RMB has lost more value to the dollar than in recent times. The Japanese are using this as a chance to reinflate their economy. They have allowed the yen to depreciate to a 20 to 25-year low against the US dollar because it suits them fine. Only the euro has not tightened sufficient, is weakened because the European Central Bank has not yet tightened at the same level as the US Federal Reserve because they still believe that the inflation in the Eurozone area is transient. But things are not looking good in the world stage. Food inflation is increasing. Prices of food such as wheat and basic food commodities such as wheat, rice and pulses are going through the roof. In fact, India has banned the export of broken rice and has export duty on export of other forms of rice. You may be aware that India has already banned exports of wheat. Therefore, it is very clear that India is worried about food price increases. If India is a major player in the rice and wheat market, if they ban the export of rice and wheat, it means prices of those commodities are going to go up in the world. So it looks like this inflationary pressures will continue for the next 6 to 7 months, and the US dollar will continue to gain strength. Till then, there is no alternate for the mighty dollar. But even after that period, seems to be no rival which can displace the dollar in this period of time, and dollar dominance is set to continue at least for a decade. Thank you for watching. Be rich. If you like this content, kindly hit the subscribe button of my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.